Hello investors, and welcome to the channel where I talk about investing for the long term through investing in companies that pay a dividend. My name is Michael, and today we're going to start off with looking at how the market ended for the week and then look at stock futures. Overall, as we can see here, the market is down quite a bit for the week. If we take a look at the major indices, for the S&P 500 index, it is down 2.12%. For the NASDAQ index, it is down 1.76%. And lastly, for the Dow Jones Index, it is down 2.53%. Now, let's take a look at the major bad news that's causing the stock market to shift downward this week. For one, the new coronavirus 2019 is the main contributing factor for the downturn in the value of the stock market. The World Health Organization has declared that the coronavirus is a public health emergency for all countries because it's gone spreading from person to person in one country, namely China, to spreading from country to country at an alarming rate. This coronavirus is the main fear-causing contributing factor amongst many investors to sell out of their positions. And when the price of stock goes down, then there will be a opportunity to buy stocks at a cheaper price, which plays into the mentality of dollar cost averaging downward. Now, this new coronavirus 2019 is becoming a bigger problem because if China, one of the strongest industrial world powers, can't contain nor cure the infection, then people in second world and third world countries that do not have the resources to combat this health issue are in grave danger. The vast economic prowess of China and the US is on an extraordinary scale because these countries can easily use resources to build specialized hospitals, invest in science to find cures and vaccinations for diseases, and quarantine a mass of people within just days or even hours. Just searching on the internet, anyone can find videos and articles of the quickness of China's ability to build hospitals, to quarantine its citizens, and even roadblock people from leaving the country. This article right here describes how quickly that these hospitals are being built, and also how the government of China is putting people into towns and cities and just barricading them, preventing them from leaving the country. However, there are countries out there who aren't like China, countries in Africa who don't stand a chance to fight off the disease like the coronavirus, and therefore a global health warning has been issued by the CDC. Now let's take a look at the rate at which the coronavirus is spreading and compare it to similar viral outbreaks in the past. In the latest report given by the World Health Organization, by the numbers on a global scale, there have been 11,953 confirmed cases of people infected with the coronavirus within 1 month. 2,128 of those 11,958 cases are new within the past day of the report. According to Figure 1, the majority of those reported coronavirus cases are from China, and it seems to have originated from Hubei province. Looking at Table 2, the amount of confirmed cases is highly disproportionate when comparing the Hubei province to other territories in the area of China. As we can see here, over 7,000 cases originated from Hubei, while in total there's only been about 11,000 reported cases. Now, looking at the information about the coronavirus given to us by the CDC, we have to question whether or not this is enough to raise concerns about this virus. In order to answer that, I'm going to look at the R0 value of the coronavirus to gauge how contagious the infection can be, and then compare it to the R0 values of similar viruses. By definition, the R0, or the reproduction number, is a mathematical symbol that indicates the contagiousness of an infectious disease. This R0 value describes the average number of people who will be infected by a disease from one contagious person. For example, an R0 value of 2 would mean that for every person that's infected by a disease, these infected people will most likely infect on average 2 other healthy people. Now, ideally, we would want to see a disease that has an R0 value of less than 1, because this means that the existing infection will cause less than 1 new infection. This information translates to the disease will be on a decline after treatment and hopefully will eventually die out. When a disease has an R0 value of 1, this means that each existing infection will cause 1 new infection. This information translates to the disease will remain active and stable, but at the very least there won't be an outbreak or an epidemic. When the R0 value of a disease is more than 1, this means that each existing infection will cause more than 1 new infection, causing it to spread between people and possibly resulting in an outbreak or an epidemic. Now, so far, the coronavirus has an R0 value anywhere between 1.4 to 3.8 when it was first reported. Comparatively, if we take a look at other similar diseases such as SARS or MERS, SARS existed around 2002 to 2004, had an initial R0 value between 1.77 to 1.85 when first reported, but has since then decreased to less than 0.4. Comparatively, the MERS virus originated from 2012 to the present day. However, it's currently only in camels and has an R0 value of between 1.9 to 3.9 when first reported, but has since decreased to about 0 and is not easily passed from human to human interactions. Now, this coronavirus has issues on 2 fronts, one on an economic level and another on a health level. From an economic level, it seems that there will be a minor pullback in the market as fears and uncertainty plagues the minds of investors. In addition, China is a large contributor of the global economy, so any troubles that they face as a country will surely negatively impact the market, which will probably lead to slowing growth. As far as health concerns, more wealthy countries like the US and China will most likely be fine because they can afford the science and the medicine and the resources to fight this kind of disease. However, in contrast, it is the impoverished countries that will meet massive repercussions, which will most likely lead to death of thousands of people, if not more. Now, looking at my portfolio this week and comparing it to the indexes, we can see the effects that the coronavirus has on the stock market. So far, the coronavirus has caused quite a bit of market volatility. When referring to market volatility, I mean that the overall stock market has a pullback and therefore prices have gone down just a bit. Looking at the past week, my portfolio is currently down 2.86%, causing a loss of almost $230. In the past day, my portfolio is down almost $140 alone, which is more than half of the losses experienced this week. Pretty much every sector is down for this entire week. However, starting now until the next few months would be the best time to put money into the stock market because prices are lower and that means more shares can be bought with the same amount of money. Eventually, a cure or vaccine will be made to combat the coronavirus and the market will eventually bounce up again. Looking here's data comparing the coronaviruses of our time period and the market implications. Over here, this is a graph that shows how the US stock market and the China stock market reacted to the presence of SARS all the way back from 2002 to 2004. Over here is current day, how the stock market of the US and China are responding to the coronavirus. As we can see here, the stock market is starting to take a dip, but looking at past results, these dips will eventually go back into positives. So let's take a look at my portfolio and what I did this past week. So this past week, I invested over $1,000 into my Roth IRA to buy shares of a couple of companies and even sold a few because I thought that the profits were just right to take or there was fundamentally something wrong with the company. I bought shares in all these companies that I'm about to show you right now because I thought that they were at a good price for me to dollar cost average my way into my targeted positions. So as you guys can see here, I bought all these companies on the left hand side and sold all the companies on the right hand side. That was my first buying day that I did on January 28th. The next one, I bought a couple more shares because the market dipped again on January 30th. And then again on the 31st, I bought a couple of more shares and I sold off Amazon because it was trading at all-time highs and I figured it'd be a good time to take in profits. So as you can see, I bought shares in all these companies because I thought that they were at good prices and I figured that I could dollar cost average my way into better positions. On a fundamental level, all these companies are pretty solid for the future of their business and they pay a dividend for holding shares. And also, these dividends ideally are set to increase over time. So as long as these companies pay out a dividend that increases over time so that compounding interest can take effect, I will gladly continue to buy shares of that company at a discounted price. In addition, for this week, I have earned a decent amount of dividends from various companies which I can use to reinvest in my portfolio. As you can see here, I earned 10 cents from Campbell's Soup Company. Over here, I earned 88 cents from Bank of Nova Scotia. Over here, I earned 7 cents from Comcast. Over here, I earned 21 cents from BGS Foods. Another dividend for $3.33 from B&G Foods. I earned 77 cents from Chimera Investment Corporation, 18 cents from Edison International, $5.43 from Gladstone Commercial Corporation, 7 cents from Humana, 55 cents from JP Morgan and Chase, 47 cents from LTC Properties, 14 cents from National Health Investors, $1.08 from New Residential Investment Corporation, and 6 cents from WD-40. All the dividends that I have earned are a result of me owning shares of that company. This is money that I did not have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to passive income. Earnings, which are derived from an enterprise like a rental property or company, which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. With the month of January behind us, let's take a look at the dividend spreadsheet. So far, this portfolio has produced $18.12 for the month of January through passive income. So essentially, having to do pretty much nothing, I earned $18.12 passively through this portfolio, which is equivalent to a little bit more than an hour's worth of work at some entry-level jobs. I'm excited to inject some more money into the stock market and keep everyone updated with my progress for the upcoming week, assuming we're still alive from the aftermath of the coronavirus. Thank you so much for watching this video until the end. This concludes the update portion of my portfolio. If you liked the video, then please give it a thumbs up as it will help the channel grow immensely. If you have any comments or questions, then please leave them down below in the video, and I'll do my best to personally address it either in the comments or answer it in future videos. I greatly appreciate everyone for watching my videos and hope to speak with you all again soon.